Okay, we will start today's session. We are studying the course unit Institutional Legal Framework for Public Financial Management. Today we will discuss about this part, a legal framework for public financial management. So this is the fifth chapter in your curriculum. Now today's learning outcome: upon completion of this subject, the session, you should be able to first explain the public financial management framework laid down in the Constitution. Number 2, describe, interpret, and evaluate constitutional provisions related to public financial management. So these are the two learning outcomes of today's session. First, we will discuss. Before that, we will do some revision about the last class. So in the previous chapter, we have discussed about institutional framework. Institutional frameworks mean the public financial management. The top, is a president, executive president, and the parliament. And parliament, under that, cabinet, and the cabinet, Minister of Finance, and the Minister of Finance is accountable for cabinet, and also is accountable for parliament. And Minister of Finance, through budget, he allocate money to allocate fund resources to other line ministries, and the line ministries will allocate fund to departments under their own ministries, and under the departments there are some institutions. In that way, the public finance management is done. In addition to that, to monitor public financial management, Auditor General Department and COP, Committee on Public Enterprises, and Committee on Public Accounts. So these commissions, these independent bodies are monitoring the public financial management framework. So this is what we have discussed under the institutional framework. So in corporate finance, you may study these things about under the corporate governance. So in the corporate governance, there should be a clear organizational structure and delegation of power, delegation of authority, monitoring system. So all the things you have studied under the corporate governance. So like that, in public finance, we have discussed under the institutional framework. Now, today's topic is about legal framework. Legal framework. In companies, corporate finance, the legal frameworks are Accounting Standard, Companies Act, Companies Bylaw, and Companies Resolution, like that. When we talk about public finance, the legal framework, so it's about Constitution is the main one. Constitution of the Socialist Republic of Sri Lanka, and another act mainly. Right. Let's see the introduction of legal framework with regards to public finance management and public right? uh, this section discuss the legal sources from which public sector managers are getting guidance and instructions on managing the public finance. You may ask, who gave power to Minister of Finance to allocate money? Who has given the power to publish financial regulations to the Minister of Finance? Who has given the power to the General Department? Who has given the power to COPA, who has given the power to the Parliament, who has given the power to the Cabinet? So these kind of questions will arise in your mind. So this section discusses the legal sources from which public sector managers, public sector managers mean here when you think about a particular government institution, public sector institution, there's a head. He has power to spend a certain amount of money. It varies the amount of expenditure. The limit varies institution to institutions, department to department, according to their legal framework and their position, their power. Who has given the power? So power, the head of each institutions, in particularly public sector institutions, who has power to spend money, or the head of finance in public sector organization, in public sector in our country is Minister of Finance. He's the chief of finance, management of finance of public fund. Who has given the power? Where the Minister of Finance getting the power to allocate the money, to propose the budget in the Parliament, and where he has getting guidance how to prepare a budget, how to submit the budget, how to present the budget, how to implement the budget. And once the finance minister allocated fund to each ministries, departments, organizations, and he has a power to monitor whether the allocated fund is spent according to their objective, the allocations. Are there any deviations? Who is monitoring that? And to implement the allocations done by the Minister of Finance, time to time he gives instructions by the way of circulars, letters, and mainly the instructions are given by financial regulations. So these kind of things we'll discuss in the legal framework. So this section discusses the legal sources from which public sector managers, especially head of the departments, government sector accountants, and the people in the position of allocating or managing the fund in the public sector organization are getting guidance. So for example, head of the department to spend a particular amount of money to a particular project, he has some authority. When they spend money, he has to guide it by someone else or some guidelines. For example, for a government project, they are going to purchase a particular machine, or they are going to construct a particular building, and how can they offer the tender to the contractors, and what are the procedures to be followed by the particular head of the department when they make purchases. So this kind of guidelines, instruction of managing public finances. The regulatory framework of public financial management consists of parliamentary legislation. We have studied in the last class, the parliament has the supreme power in public finance. Even Minister of Finance and Cabinet are the executive parties. They are answerable and accountable to the Parliament. The regulatory framework of public financial management consists of parliamentary legislation and other regulations pertained to the management, accounting, auditing of public finance. So all the public financial management things, subjects are subject to parliamentary supervision. They seek to provide broader and specific guidelines for managing public revenue, spending, and accountability. When they do public finance management is talk about it's concern about where the government is going to get revenue in the form of taxes and other way of income revenue, and how government sector organization can spend money, allocated money, and accountability. They are answerable to the public. It means they are answerable in the parliament. So the legal framework provides a broader and specific guidelines for managing public revenue. So how to collect revenue, how to collect tax, who is going to collect tax, when they are going to collect tax, who pay income tax, how much they have to pay income tax, how often they have to pay income tax. So this kind of guidelines, it may be broader or specific, and spending, how much allocated, how much ceiling, how much their maximum limit of spending in a particular time, how much the approval limit, so this kind of things are clearly specified in their legal framework. Now let's see what are the components of the legal framework. The main source of law for public financial management are constitution. What is constitution? An organic budget law, an annual budget law. All of you are very familiar with the term annual budget law. Sometimes it's called as Appropriation Act, and some supplementary budgets. Enabling legislations, financial regulations, and other instruction. We give more focus on constitutions first. A constitution, the legal framework, the constitution, the most important, the core of the country's the legal system of the country, constitution. The organic and fundamental law of nation or state. Constitution is the organic and fundamental law of the country. So it is the supreme law. It is the supreme law of a state or country, and thereby the law of the laws. Time to time, the government has introduced new acts which are passed from the parliament. All these laws are basically derived from, basically subject to the constitutions. Any laws or any act or any bills cannot violate the constitution of the country. So the constitution is the supreme law of the country, and thereby the law of laws. So all the laws, all the act, all the bills, all the motions should not contradict with the constitution of the country. The constitution is written in Sri Lanka, though in some countries it is unwritten. There is no constitution in some countries in the way of the written document. For example, United Kingdom. So they don't have written constitutions like us. They are following their traditions. The constitution establishes the character and conception of the government and lays the basic principles on which country should be governed. The country should be governed based on their constitutions. Even His Excellency President and Parliament does not have authority to violate the constitution of the country. It's a foundation. It establishes the character and conception of the government and lays the basic principles on which the country should be governed. How the country should be governed. It is very clearly explained in the constitutions. It defines the power. The constitution defines the power, functions, and duties of various branches of government. The constitution explains what are the powers, functions, duties to His Excellency President, His Excellency Honorable Prime Minister, line ministers, finance ministers, cabinet. It clearly explains, it clearly defines the power, function, duties of various branches of the government. It may be in case of the in the central government and provincial government, local government, in whatsoever. And the power, the function and duties at presidency level, at cabinet level, at ministry level, department level, institutional level. So it's clearly defined. Sri Lankan Republic Constitution of 1978. It's the second constitution after the independence to our country. So Sri Lankan Republication Constitution of 1978 with its 20 amendments. Our constitutions, the present constitution came across 20 amendments to it is the supreme law of the state of Sri Lanka. It's a supreme law of the country. The constitution deals in general with the broadest principle of public finance. The constitution does not the constitution does not specifically covering the public finance. Rather, it gives the broader principle, widest principles of public finance management. For example, the requirement, the constitution, right, that requirement that all public funds to be paid into a designated account. All the government revenues should be deducted, should be deposited, or should be paid into a specific account. Sometimes we call, so for your understanding, we can call it as a treasury. All the public funds, all public revenues should be deposited in a designated account. For example, for your understanding purpose, we can keep in your mind a treasury, and that this fund can be spent only under the authority of legislative. So what is meant here, legislative? So parliament. All the government revenues should be, all the government funds should be deposited or should paid into the designated account, treasury, and the allocation of fund, the spending money from the treasury, the authority is in the hand of the parliament, the legislative, the parliament. So that is number one. Number two, financial relations between the national and subnational level of the government. The financial relations between the national and subnational level of the government. Subnational include what? A provincial, a local, like that. The states. The financial relations between the national and subnational level of the government. And the third, the distribution of power in budgeting between the executive and the legislation. As we discussed in the last class, the budget, the proposing budget, the drafting budget, presenting budget is the responsibility of finance minister. He has the power to present the budget. In addition to that, cabinet of the country and line ministers, cabinet ministers, are the executive body of the budget. And there are sometimes there's a conflicts between the legislature, the parliament, and the executive parties. The constitutions of the country, they distribute the power with regards to the budget between the executive party and legislature. That's why the Minister of Finance and Cabinet are answerable at the Parliament. They are accountable to the Parliament. So the constitution order to the executive parties, to order that the executive parties are accountable, answerable to the Parliament. The legislature, so it's a common word, it's referring Parliament, Senate, Assembly, like that. So when they are not stated in the Constitution, these key principles should be dealt with an organic budget law. Chapter 17 of the Constitution of Domestic Socialist Republic of Sri Lanka, the article number 148 to 154, contains a broader principle on public finance, not focused. It gives a broader perspectives, a broader principle on public finance. With regard to public finance, Chapter 17, article number 148 states that full control over the public finance lies with the Parliament. Even though the Minister of Finance is the custodian of the public fund, the full control of public finance lies with the parliament. The finance minister is act as a manager. He is managing the fund, but the finance minister is answerable, accountable to the parliament. The full control over the public finance lies with the parliament. And number 149, all government revenues flow into the consolidated fund. Consolidated fund, as I explained to you in the previous slide here, the constitution required that all public fund to be paid in a designated account. In line with this, Article 149, all the government revenues flow into consolidated fund. Consolidated fund. So government has a fund. All the government revenue, all the source of government revenue should be paid into the consolidated fund. So sometimes we call it as treasury. Article 150, warrant under the hand of the Minister of Finance is to be issued for any withdrawals from the consolidated fund. The all government money are deposited in the consolidated fund, and this fund has to be withdrawn to specific organizations or specific ministries, specific departments for different purposes. To withdraw money from the consolidated fund, the Minister of Finance has authority to give warrant. The Minister of Finance has the power, has the authority to issue a warrant to withdraw the money from the consolidated fund. The Minister of Finance issue warrant according to the budget law proposed in the parliament. So warrant under the hand of the Minister of Finance is to be issued for any withdrawals from the consolidated fund. Article 151, Parliament may by law create a contingencies fund for the purpose of providing for urgent and unseen expenditure. The Minister of Finance allocate money to each ministries, each departments, so which are predictable expenditure, planned expenditure. Sometimes there are chances to incur unpredictable expenditures like tsunami, natural disaster, and pandemic. So this kind of unexpected situations, there are chances to incur additional expenditures which were unpredicted. So in these circumstances, government need to spend money to manage this kind of unexpected circumstances. For that purpose, the parliament by law create a contingencies fund for the purpose of providing for urgent and unforeseen expenditure. So this power in the hand of the parliament. 152, no bills or motions affecting revenues shall be introduced in parliament except by the minister with the approval of the cabinet. So whatever the bills, whatever the act, whatever the motions which are affecting the government revenue should be introduced, should be proposed in the parliament only by the particular minister, subject to approval of the cabinet. And 153, appointment of Auditor General. Appointment of Auditor General. Appointment of Auditor General by the President, subject to the approval of the Constitutional Council. Constitutional Council. You know that the Auditor General, like Attorney General, so Auditor General, he is the head of the Department of Auditor General. He has the power, or he or she has the power to audit all government-owned departments, ministries, and government-owned enterprises, business enterprises, or other statutory bodies under the government. So, Auditor General. The appointment of Auditor General is done by President, His Excellency, President of the country, but he seek the approval of the Constitutional Council. There's a council called Constitutional Council. That council, based on the approval of the Constitutional Council, the President appoint Auditor General. Article 52, 153, H, A to H. Paragraph from A to H. Constitution of the Audit Service Commission vested with the power on the appointment, promotion, transfer, disciplinary control, and dismissal of members belonging to the Sri Lankan State Audit Service. You know, the government auditors, not private auditors, the government auditors. The government auditors, we call them as Sri Lanka Audit Service, Sri Lanka State Audit Service, Sri Lanka Audit Service. We call them as government auditor. So they are working under the Auditor General Department, and so we call them, and the Constitution, they labeled as officers of Sri Lanka State Audit Services. So the appointment, the promotion of, the transfer of disciplinary actions, disciplinary control, and dismissal of the members belonging to Sri Lanka Audit Service is the power to appoint, to promote, to transfer, or to take disciplinary actions or dismissals of the members of Sri Lanka State Audit Services in the hand of Audit Service Commission. Audit Service Commissions. So Audit Service Commission has the power to appoint, promotion, transfer, disciplinary control, and dismissals of Sri Lanka State Audit Services. Ministers does not have power, or any other politicians does not have power to appoint or promote or transfer or to take any disciplinary actions against or in favor of Sri Lanka, of them. Article 154, duties and functions of Auditor General, and report to the Parliament within 10 days. So Article 154 says the Auditor General Department should report within 10 days. And also this 154 explains what are the duties and functions of the Auditor General. The legal framework, again Constitution, the most important amendment in the Sri Lankan history, that is 30th Amendment to the Constitution. 30th Amendment to the Constitutions. So 30th Amendment to the Constitutions established of provincial council. So before the 30th Amendment, there were no systems about the provincial council. The provincial council, the term provincial council, the establishment of provincial council arises due to the 13th Amendment. And appointment of governor, devolution of power. Devolution means what? Delegation of power. Before 30th Amendment, only Sri Lanka had a central government, only parliament. And after 30th Amendment, they have proposed the provincial council, and through that provincial council, they have delegated some power to the provincial councils. Finance Commission, constituting a governor of Central Bank of Sri Lanka. Finance Commission consisting of governor of the Central Bank of Sri Lanka, secretary to the treasury, and 3 other members to represent 3 major communities appointed by President on the recommendation of Constitutional Council. The 30th Amendment, that's a commission called Finance Commission. So they are in charge, they are monitoring public finance management. Finance Commission. So this Finance Commission consists of the governor of Central Bank of Sri Lanka and secretary to the treasury. In addition to that, 3 members. These 3 members are appointed by the president, and these 3 members represent 3 major communities of the country. And the appointment of these 3 representatives, the appointment is done by the President, His Excellency President, subject to the recommendation of Constitutional Council. Now we look at organic budget law. Organic budget law. Generally, organic budget law, it's a new term for you in our lines. The budget principles, how to prepare budget, how to present budget. So that kind of scenarios will be included. So the finance minister prepare budgets based on the blueprint, based on the organic budget law. But according to my knowledge, our country does not have this kind of organic budget law. Right? Generally, organic budget law provides a legal base. It provides a legal base for all key roles and relationship between different actors in fiscal management. There are different actors in public financial management: Minister of Finance, Cabinet, Parliament, Treasury, Central Bank of Sri Lanka. So there are different actors in the fiscal management, and lays down the major principle of budget management and auditing. In some countries, for example, United States, fiscal management is framed by several acts, several laws, several acts covering specific areas instead of one single organic law. For each and every areas, it has its own organic budget law. The United Kingdom and some other Common Law countries, including Sri Lanka, have a number of financial regulations and accounting guidelines but do not have an organic budget law. So in our country, so we have financial regulations and circulars and instructions letters issued by the Minister of Finance. We are using the government public finance, public sector are using these things instead of organic budget law. The United Kingdom and some other common law countries, including Sri Lanka, have a number of financial regulations and accounting guidelines, but do not have an organic budget law. They rely heavily on established administrative practices and procedures of Parliament as a basis for budgeting rules. There we have a strong, heavily established financial regulations and circulars. By contrast, civil law countries such as France, Germany, Italy have extensively codified their legal framework and their organic budget laws. So legal framework, in particularly organic budget law, OBL, we call it organic budget law. It consists of 3 parts. First one, general principles. Second one, budget formulation. Third one, budget execution and audit. So in our country, we don't have a specific organic budget law, but if it is available in a country or the OBL is implemented in some countries, so the OBL consists of 3 parts. First part is general principles. It explains general principles. It explains budget formulation, and it explains budget executions. So when you look at the organic budget law, so as far as general principles, so it gives the principle of good budgeting, to consider a budget as a good one. So it has some principles: fiscal discipline, allocative efficiency, cost effectiveness. And second, concept and definitions, scope of budget and comprehensiveness, accounting and classification issues, appropriation and cash limits, roles and responsibilities of budget institutions, relationship with other public finance laws, power of Ministry of Finance to regulate the budget system. So the organic budget law, it has one part, so general principle, so you can find under this OBL. And the second part is a budget formulation. The budget formulation, you can find budget timetable, multi-year framework, setting initial budget ceiling in spring, budget circular, integrated procedure for current and capital expenditure, analysis of budget request, preparation of draft budget law, submission to the Parliament, content of the budget document, rules for supplementary budget. So these are the things you can find under the budget formulation in the organic budget law. The third one, budget execution and audit. Then you can find treasury or cash management function, in-year cash limit, internal control and internal audit, penalties, procedure for non-compliance if there are any deviations. So what are the penalties? to the officers who has violate the procedures. Fiscal impact analysis, end of year budget execution, external audit procedure, management of government debt, fiscal risk and contingent liabilities, and fiscal rules for EBF and subnational government. Now we look at annual budget law. In our country, every year the Minister of Finance prepare the budget and it proposes it present in the parliament. It is presented in the parliament, and then after the several stage of reading and voting, it's become law, budget law for a particular year. Therefore, it's called annual budget law. So it has Appropriation Act. It is an Appropriation Act. So the budget, in the budget speech, we can find the allocation of money, allocation of fund to each and every department, each and every ministries, each and every public sector institutions. This is called what? Appropriation. Appropriation Act. We call it Appropriation Act. How to allocate money. So in the financial plan for the forthcoming financial year, so the budget is the financial plan, and Appropriation Act is an act of the parliament that authorizes, so the budget law, the budget is mean the Appropriation Act authorizes the treasury and the government to issue and use the fund of the consolidated fund. You know, the consolidated fund also are paid in this account, and this money will be withdrawn by the revenue authorities. So they want warrant. The warrant is issued by the Minister of Finance, and the power, how much he can allocate, for how much they can issue warrant, it is subject to the budget. The budget clearly outlines how much can be spent, allocated. The Appropriation Act also appropriates the fund, allocate the fund to individual ministers and other government bodies. It generally set out the total appropriation for the financial year. So how much the total amount of spending for the year, for the next year. How it would be financed, or borrowing limits. So how government is going to raise fund to the treasury. That's called consolidated fund. And if chapter, right? So it's limit for advanced account activities, power and procedure to transfer the saving and to vary from some limits of appropriation. Sometimes the allocated money, for example, government allocated 10 billion for a particular institution, but for the year they have spent only 80 billion. So 2 billion is a saving. Sometimes the 10 billion is not enough. They want additional 5 billion for the next year. So this kind of issues, the power and procedure to transfer the saving and to vary from some limits of appropriations. The objectives of Appropriation Act would be given in the Act, and they are the objectives, right? The objectives of the Appropriation Act. Sometimes you may call it Appropriation Act is what? Annual budget. To provide for the public service expenditure. Public expenditure, service, to provide for the service, mean public expenditure for the financial year, to authorize raising of loan inside or outside Sri Lanka for the purpose of such service, to make financial provision in respect of certain activities of the government during the financial year, to the payment by way of advances out of the consolidated fund or any other fund monies or at the disposal of the government. Sometimes the governments dispose of some assets to raise fund. For example, part of our countries or part of our government properties like Trincomalet oil tank or some areas of the ports, sometimes disposed of or sometimes in the lease terms. So those kind of things, the money required during that financial year for the expenditure on such activities, to provide for the refund of such money to the considered fund, to make provision for matters connected therewith or incidental thereto. So these are the objectives of the annual budget law. Some is called as Appropriation Act. Enabling legislations. So in addition to the budget, there are some that grant the power to spend, to manage the public fund. So Enabling Act. So you may have come across about Universities Act, State Universities Act, and other act like Companies Act and Corporations Act. So there are different types of act. It's empower, right? Enabling Act is a piece of legislation through which public entity is established. So when you look at the People's Bank, it's a government owned bank, state owned bank. The government has established the People's Bank based on a particular act which is passed in the parliament. For the establishment of any government establishment, organizations, time to time government passes act. Enabling Act often establish government agencies to carry out specific government policies in the modern nations. It generally provides for power, duties, functions, objectives, scope, management, finance, etc. of such establishment. When you consider the People's Bank Act, so the act clearly explains what are the powers, what are the duties, what are the functions, what are the objectives, what are the scope, how management should be, how the organization will get money to run the organization. So this kind of things are very clearly defined in the specific act. That act is called what? Enabling legislation. Such entities shall operate within the limit of power so granted. Enabling legislation generally provides the following aspect: establishment, objectives, power and functions, authorized capital. What is the authorized capital? In company we call it stated capital. Funding arrangements, whether it is self-financed institution or treasury dependent finance institutions. Borrowing powers, governance, appointment and removal of board of directors, responsibility of directors, accounting and audit, recruitment of personnel and dissolution. All the things are clearly defined in the enabling legislations. The following are the few examples of enabling act in Sri Lanka. You can find a Provincial Council Act, Industrial Corporation Act, State Trading Corporation Act, Agricultural Corporation Act, Universities Act. Under the Universities Act, universities are established. in the Act, in the Universities Act, they are clearly defined what is university, how the university should be managed, what is the Senate, what is the council, and a lot of things. The power, duty, how they get money, so where they get fund. So all the things are clearly defined in the Universities Act. So these are the examples for enabling legislations. Other statutes, other acts, other laws, legislations. The following statutes also governs the management of public enterprises. Part 2 of the part of the Finance Act number 38 1971 relating to the financial control of public corporation. This act is to be repealed by proposed Public Finance Act, which would provide regulatory framework for public sector financial management, including public enterprises. Conversion of public corporation or government-owned businesses undertaking into public companies. So some companies, some government-owned corporation and government-owned businesses are converted as public companies. So those conversions are executed based on this law. Companies Act number 17 1982. It's a previous act, and the new act was in 2007. Companies Act under number 7 of 2007. No, Companies Act. The Companies Act under which government-owned companies are incorporated. Enterprises Reform Commission of Sri Lanka Act number 1 of 1996. And we look at very important one, the financial regulations. Most of the time I pronounce that word financial regulation, and I have already shared the document, the financial regulation, with you. So financial regulation is issued by the Minister of Finance. The last edition was 1992. FR, financial regulation, is issued under the hand of the Minister of Finance, and financial regulation provides a regulatory framework within which the government financial transactions are carried out. So all the financial transactions are carried out based on the financial regulations. Like LKS, in government sector, they have to regulate, but they have to deal the financial transactions with financial regulation, align with financial regulations. Financial regulations intends to ensure orderly financial transactions in public sector institutions. The present financial regulation in 1992 supersede the 1996 financial regulations. Financial regulations are binding the ministries, department, statutory bodies, and all state employees. In the case government corporations, these FR will apply unless they have adopted their own comprehensive financial regulations, rules, and procedure. You know, there are some corporations, government owned corporations. Sometimes they have established their own financial regulations. For example, Sri Lanka Telecom is a company, public company, and it's a government-owned company. Or when we talk about People's Bank, it's a corporation. People's Bank is a corporation. Their financial transactions are not based on the financial regulations. So they have their own. They have adapted their own comprehensive financial regulations. So they are not following FR 1992. Rather, for example, People's Bank, they have adapted and they have their own financial regulations. If there is no such arrangements, they have to follow FR directly, 1992. So when you look at financial regulations, we see the scope. Financial regulations mainly deal with regulations on the following aspects. First, estimates of expenditure and revenue of a particular organization, authorities, expenditure, refund and write-off, financial management and accountability, a receipt and payment of money, custody of public money, interest and bank accounts, accounting and books of accounts, advance accounts, kacheri accounts, count accounts, court accounts, right, foreign aids and printing and publications. So when you look at the financial regulation, you can come across these issues. And supplies and works, services, miscellaneous. And other regulations you can find treasury circulars. Time to time the treasury, on behalf of the Ministry of Finance, treasury issues circulars and ministry directives. Time to time line ministry issues circulars, procurement guidelines. When a government organization want to purchase a particular item or service or works, they have to follow the procurement guidelines. Manual of procedures and establishment code. The establishment code specifically focus on HR practices. And you may have, if you want more knowledge, you can have this textbook for the reading. You may have 10 pages, the legal and institutional framework. It's a common one, right? And if you have any questions, you can ask. You can unmute your mic, you can ask. Any questions?